As stocks keep trucking to new record highs, your next guest says playing defense is your best strategy right now. Let's bring in Mark Yusko, the head of Morgan Creek Capital Management. Mark, great to see you. Welcome back.
Hey, Melissa, thanks for having me. And before we dive in, I just wanted to channel a little Eminem from 8 Mile and say, look, I know all the bad stuff you guys are going to say about me, so let's get it out of the way first, right? At the beginning of the year, I used the bear market word. And I am happy to report, obviously, that things didn't turn out quite as negative as we thought. The great news on the other side of that is our long-short fund up about 3x. The market's up about 15% instead of 5%. And then the second thing, when we were together just a few months ago, I did talk to you about how all the economic pain I thought was still ahead of us. Mm-hmm. And the market just doesn't seem to care. So now we got that out of the way, fire away.
But you still think that there's a reckoning? I mean, even though the market doesn't seem to care about this all, you're still sticking to your guns?
Yeah, look, I feel like the risk reward really hasn't changed much since you and I started this conversation. It's amazing. Almost 2 years ago in October of 2018. And, we were at record valuations then. We're back to those record valuations again. In fact, worse, because earnings have actually declined. I mean, you look at since March 23rd, right, where the PE got down to as low as 17, we're up to 29.2 for the overall market. And certain stocks, you guys were just talking about Apple. Apple's PE has gone from 15 to 33, just kind of sillyville. So we think the risk reward is tough here. One of the things we talked about last time in June was how the nominal value of stocks is up a little bit. It is actually up, 5% for the year. But when you look in real terms, when you denominate in gold instead of dollars, we're actually down 20%. And over the last, 19, 20 months that you and I have been talking, we're down almost 44% because of this devaluation of the currency that's going on. So a lot better places to put capital today are gold miners, silver miners, real assets, and then my favorite, Bitcoin.
So in your long-short fund, and I'll go there because that's where you cite your outperformance, what are your biggest trades, your big gainers that you're still in?
Yeah, thank you. So if we think about the long-short model, right, you have to be long certain things. And we have been long technology, particularly outside the U.S., particularly in China. That's been our best winning trade. What we call our top 20, which is our 20 concentrated longs from that long-short portfolio. We run that as a separate account as well. That's up almost 50% this year. So that's been great. Names like Sea Limited and Tencent. So Chinese tech has been really doing much better even than the FANGs. The second thing is on the short side, finally, the great separation is occurring. And you've seen some of the companies that were over-levered and struggling, like the retailers and others, actually go down. And I'm with the traders on this euphoria over the vaccine. Look, the vaccine is like last year's trade deal headline. There was no trade deal. There was never a trade deal. There's not going to be a trade deal. There's no vaccine, not going to be a vaccine. You can't make a vaccine for coronavirus. So as far as I know.
Hey, Mark, so I don't know this M&M guy. I like that this Slim Shady person, but I'm not sure about the M&M. But with that said, I wasn't going to say anything negative. I mean, I admire your work. We've said that for a while. But you mentioned October 2018. I think that's important because it coincides, as you know, with Jerome Powell stepping in and saying, lowering the balance sheet was on autopilot and they were going to raise rates. And the market went down almost 20% in a month and a half. They've obviously backtracked since. I thought the market rallied today at the end of the day because there was a news alert that Jerome Powell was going to make a profoundly consequential speech on Thursday about how the Fed measures inflation, which is folly. But that's neither here nor there. Is it just that simple, though? The fact that the Fed is there and they're going to continue to be there and they're going to continue to move the goalposts?
I think you're dead spot on. I mean, that's exactly it. Look, interest rates are down 62%. Now, it doesn't mean we went from 63 to 1, but we went from over 2% 10-year to 60 basis points. Let that sink in. People are going to lend the government money for 10 years at 60 basis points. And the direction of interest rates, we think, is in a death spiral. We think they're all going negative. Every interest rate in the world over the next decade will be negative because there's no way out, right? If you have a lot of debt, you can either pay it back no way they can pay it back. You can restructure it. No one's going to take the restructured deal. You can default on it, but then you get kicked out of office, or you can inflate it away through devaluing your currency. And to your point, that's exactly what Jerome Powell and all the other central bankers have done. And that's why I quote the gold, right? Gold prices are rocketing. And you've made more money in gold stocks, the new FANG, FAAANG, Franco-Nevada, Anglo Eagle, Anglo Gold, Ashanti, Newmont, and Barrick. And there's one other A in there. But those guys are up on average 120% since March. And look, the Nasdaq's up 65, and they're up twice as much. So it's a devaluation of the currency because the empire has too much debt.
Mark, great to speak with you. We'll see you soon.